My name is Stacy Schwartz, and I'm the Associate Attorney at the Flammia Elder Law Firm. Late last year, President Trump signed a long-awaited tax bill into law. How has this legislation affected seniors and the families who love and care for them? Here is my take on the top 5 changes. First, the standard deduction nearly doubled under the Trump tax plan. The plan increased the standard deduction to $12,000 for individuals and $24,000 for married couples filing jointly. Before the change, the standard deduction was $6,350 for individuals and $12,700 for married couples. If you're a senior who doesn't itemize, your overall tax bill could be lower. Second, the new tax plan called for changes to the mortgage interest deduction. Before the change, homeowners who itemized their taxes could deduct their mortgage interest payments on mortgages up to $1 million. The new tax law limits the deduction to mortgages up to $750,000 for new buyers, and current homeowners will be grandfathered in at the current level. Many seniors don't have mortgages and would be affected by this change. However, the new law abolished the deduction on interest paid on home equity lines of credit. More seniors will notice this. Third, the estate tax deduction doubled. While this sounds like a major change, it affects only the richest families. Under previous law, the 40% estate tax applied when multimillionaires transferred property to heirs. The Trump tax plan doubled the estate tax deduction to $11.2 million for individuals and $22.4 million for couples. This didn't eliminate the estate tax altogether. It just means that wealthy families can transfer more money tax-free to their heirs, at least for a while. The exemption reverts to previous levels in 2026. Fourth, the medical expense deduction was expanded. The new tax plan allowed taxpayers to deduct medical expenses that are 7.5% or more of income. The old cutoff was 10% for those born after 1952. The trick is knowing which medical expenses qualify for the deduction. The IRS offers guidance on their website. Finally, the number of tax brackets hasn't changed, but the rates within each bracket have. Tax brackets now have rates of 12, 25, 35, and 37%. It's worth noting that the highest tax rate, 37%, applies to single taxpayers with an income threshold of $500,000 and to married couples earning more than $600,000. Under the old income tax brackets, the highest rate, 39.6%, kicked in for single taxpayers earning more than $418,401 or more, and for married couples earning $470,701 or more. If you're a retired person in a more modest tax bracket, you won't notice much of a change. It's worth noting that the Trump tax plan helps businesses more than individuals. Business tax cuts are permanent, while the individual cuts expire in 2025. Among individuals, the new plan helps higher income families the most. If you're a senior with substantial wealth, you'll notice significant changes. For most seniors, though, it will be business as usual.